day everyone! Assalamu alaikum warahmatullahi ta'ala wabarakatuh. Magandang umaga, maayong buntag, mapya-mapita sa Lagano-Langon. And this is the Group 4. I am Baysay Dalidasan Abid and together with me is my group mates.
I am Nufail Standard Cato.
And I am Charlotte J. Palma.
And we are going to talk about the controls testing and control risk. In this chapter, we ought to describe the nature and purpose of tests of controls. Second, identify the two approaches in tests of controls. Third, describe the procedures for performing tests of controls and give examples of each. Fourth, discuss the auditor's responsibility for communicating material weaknesses. We will also describe the procedures in obtaining evidence and selecting items for testing. Another is to define audit sampling as well as distinguishing between statistical and non-statistical sampling. And lastly, explain how sampling can assist in testing of controls. In this chapter, these are the relevant accounting and auditing pronouncements. We have first the Philippine Standards of Auditing number 260, which is revised and redrafted, and that talks about the communication with those charged with governance. Second, we have the PSA 315, which was also redrafted, and this standard covers the identifying and assessing the risk of material misstatements through understanding the entity and its environment. And lastly, we have the PSA 330, which is redrafted as well, and that mentions about the auditor's responses to assess risk. The selection of audit processes by the auditor is based on the risk assessment. The audit evidence obtained from the substantive procedures is more credible and relevant when there is more or higher auditor's risk assessment. Correspondingly, the auditor should evaluate the grounds for the assessment of the risk of material misstatement, which definitely includes assertions level for every class of transactions, account balances, or the inherent risk or the disclosure when determining the audit procedures to be performed, as well as whether the auditor's risk assessment helps determine the control risk, which is the entity's controls. Audit testing procedures are used during the execution of both tested controls and substantive procedures. This include first, preparation of the audit testing plan. Second, selecting the terms to be tested. Third, carrying out the audit procedures. Fourth, evaluating specific exemptions. And lastly, comparing the tolerable level to the estimated actual level. Of course, the PSA 530, which is the audit sampling and other selective testing procedure, provides guidelines about the use of audit sampling as well as other methods of selecting items for testing to obtain evidence, beginning with selecting all items or 100% examination. Second is selecting specific items, and of course, the audit sampling. This chapter's discussion of the 5 procedures is limited to sampling as it is used in the auditor's risk assessment procedures, specifically controls testing of typical types of transactions. What are these types of transactions? Do you know these types? Can you give us at least one? If you know it, if you know them, type in the comment box your answer and state the code right before your answer. So the code is tests, as in TESTS. So TESTS, so tests. And put the exact time you answered the question. So once again, the question is, what are these types of transactions? Do you know these types? And give at least one. And don't forget the code, which is TEST. TESTE. TESTS. TESTS. Yes, that's it. So, you can comment that on the comment box, and please put the exact time you answered the question. So, identifying and defining the major systems for transaction processing is usually not complicated. Almost any business, no matter what it does, engages in certain fundamental business operations that must be monitored and recorded. These transactions usually include, first, the selling activity, second, the buying activity, third, the production activity, fourth is the property activity, and finally, it's the income tax, investment, cash management, and financing. In preparing tests of control, it necessitates an understanding of the various types of transaction in a client entity. In the client entity, this chapter's appendix presents the key control features of each of these activities, which comprise typical transaction cycles. And now, let's go down to the transaction review. The very first series of audit tests is definitely the transaction review and should be used to ensure the completeness and accuracy of the recorded understanding. The auditor should follow each type of transaction through the system, attempting to compare the processing and control steps to all those recorded in the flowchart or narrative. The auditor must investigate every significant type of transaction from beginning to end, like it's from cradle to grave, to ensure whether he or she has distinguished all significant processes and has noted and evaluated each process of the transaction flow. And yes, transaction reviews substantiate the auditor's knowledge of a client's internal control and accounting system. Moving on to the nature of tests of controls and the tests of controls themselves. But before we proceed, let me ask you first, what number on the Philippine Standards of Auditing states that the auditor should achieve an adequate knowledge of the client's accounting and internal control systems? Is it PSA 330? Is it PSA 315? Or is it PSA 260? Type in your answer in the comment box with the code right before your answer. The code will be the color of what you are wearing right now, or the color of the shirt you are wearing right now. And don't forget to put the exact time you answered the question. Oh yes, let's see if you are really with us right now. So once again, the question is, what number of Philippine Standards of Auditing states that the auditor should achieve an adequate knowledge of the client's accounting and internal control systems? Is it PSA 330? Is it PSA 315? Or is it PSA 260? Type in your answer in the comment box with the code. You know the code, and yes, let's see if you're really with us right now. PSA 330 appears to require test of controls in two circumstances. Firstly, when the auditor's risk assessment includes an expectation of the operational effectiveness of controls. The auditor is required to test those controls to support the risk assessment. And finally, when substantive procedures alone do not provide sufficient appropriate audit evidence at the assertion level. As mentioned in the previous chapters, which is the chapter 6 and mandated by PSA 315, the auditor should achieve an adequate knowledge of the client's accounting and internal control systems to conduct the audit by going through this process in order for the auditor to fully comprehend the design of controls relevant to an audit of the financial statements. And yes, as a result, the auditor must try to assess the control risk for the material assumptions in the financial statements for the significant classes of transactions. This assessment allows the auditor to make a decision whether to use a substantive or reliance audit approach. So, the answer in the previous question is PSA 315 or merely 315. As it is stated that the auditor should achieve an adequate knowledge of the client's accounting and internal control system. So if you answered PSA 315, your answer is correct. When control risk is assessed at the highest possible level, no tests of controls are required. Alternatively, the auditor will carry out analytical procedures, and as discussed in the previous chapters, analytical procedures may be used in the planning, testing, and overall review stages of the audit. Analytical procedures allow the auditor to gather reliable sources about the specific account, and this method involves comparing financial data to auditor expectations in order to determine the rationality of an account balance reported in a financial statement. In performing the analytical procedures, primarily tests of details provide high assurance. Tests of details involves examining the actual details making up the various account balances. This technique could take the form of a test of balances details or a test of transactions details or transaction details. The test of details of balances involves direct testing of an account's ending balances, whereas the test of details of transactions involves testing the transaction that result in the account's ending balance. Let's assume that the auditor wishes to examine the cash account to demonstrate the distinction between the two forms. So, the auditor may directly test the ending balance of cash amounting to 1,500,000 by counting the cash on hand and testing the bank reconciliation prepared by the client to substantiate the validity of the cash account. When we put it in another way, the auditor may obtain evidence about the reliability of the cash account balance by investigating the individual transactions affecting the cash account which occurred throughout the year, which include the cash receipts of 12 million and cash disbursements of 11,500,000 pesos. The whole approach, however, will be impractical because there are several transactions that occur during the year, and the majority of these transactions are likely to be insignificant to the financial statements as a whole. Therefore, tests of details may be required, such as a re-performance of control procedures such as checking the bank's reconciliation. The definite goal is to determine whether there is an inaccuracy rather than to verify that a procedure is really operating. Thus, in examining an assertion within an account balance or class of transactions, a substantive approach is used, in which the auditor spends a limited amount of time in investigating internal control and focuses his or her efforts on substantive procedures. The nature of this substantive test is related to the quality of evidence. The auditor must also determine the most appropriate quality of evidence required to accommodate the optimal state of detection risk. Even though the auditor would usually prefer high-quality evidence, it is vital to know that high-quality evidence comes with a high cost. Substantive tests may be conducted at any time during the year or at year-end. Interim operations are usually perceived as being less effective due to the higher audit risk associated with auditing interim balances. As a result, the higher the risk of material misstatement, the more likely it is that the auditor would therefore end up deciding to conduct substantive tests closer to the end of the fiscal year. Conducting audit procedures at an interim date helps the auditor in identifying significant issues early in the audit and as a result, resolving them with the assistance of management or building an effective audit approach to address such issues. The amount of evidence necessary to fulfill a specific objective is referred to as the extent of substantive approach. The extent of substantive approach is determined by the auditor's professional judgment after taking into account the materiality, the assessed risk, and the level of assurance the auditor intends to achieve. Typically, as the risk of material misstatement rather increases, the auditor expands the extent of substantive procedures. However, if the auditor decides to use the reliance approach, tests of controls are performed in order to provide evidence to support the lower level of control risk. Consequently, with the reliance approach, the auditor relies on the entity's controls and limits control risk to the lowest possible level. Meanwhile, the substantive approach necessitates a more detailed understanding and documentation of internal control than reliance approach. And yes, as an auditor, we can do both of these approaches, but according to our teacher in this subject, Ma'am Tinajeros will choose substantive approach if she will be the auditor of an entity since, as I have said a while ago, substantive approach requires a more detailed understanding and documentation of internal control, and with that, it provides a more reliable result. Tests of controls are carried out to obtain audit evidence of the effectiveness of first, the accounting and internal control systems design, and it is whether they are suitably designed to prevent, detect, and correct material misstatements, and also the operation of the internal controls throughout the period. Definitely, it is essential to know that when performing tests of controls, the auditor will indeed measure the operational effectiveness of controls that have been recognized during the process of acquiring an understanding of the components of internal control, as mentioned in the previous chapters, as having the potential to prevent or detect misstatements. Additionally, tests of controls are also called functional tests in that they provide evidence that controls are functioning properly. An understanding of the nature of substantive tests and tests of control is essential in order to appreciate the relationship between the two tests. Tests of controls focus on providing evidence that a misstatement is likely to take place. Substantive tests, on the other hand, focus on providing evidence of the existence of an account balance misstatement. For example, if the results of tests of control show that systems of internal control are ineffective, the auditor will make the assumption that material misstatements are highly probable. The auditor will then conduct substantive tests to prove if there have been any material misstatements and that the auditor bases his or her opinion on the effectiveness of internal controls to help stop material misstatements in the accounting process along with this substantive test to authenticate the amounts in the financial statements when rendering an opinion on the financial statements. But unless tests of control show that internal controls are effective in preventing, detecting, and correcting material misstatements that may actually happen during the accounting process, the auditor may undertake fewer substantive tests. In contrast, if somehow the internal control are not reliable, the auditor will be required to conduct thorough substantive tests. As a result, the outcome of tests of controls is a significant factor in determining the nature, timing, and extent of the auditor's substantive tests. In order to enhance efficiency in the implementation of audit tests, auditors would normally perform the test of control simultaneously with a test of transaction details when auditing financial statements. This is known as dual-purpose testing. And yes, we mentioned tests so many times, and do you ever ask yourselves, what are we going to test? Here we go. The auditor is only concerned with those policies and procedures within the accounting and internal control systems that are relevant to the financial statement assertions during the audit of financial statements. Only those controls, on the other hand, should be tested. Similarly, some auditors believe that there is always a key control in a transaction system rendering the others obsolete. If this is the case, only that control needs to be tested. Let's say, for example, an auditor's concern about the controls over the perpetual inventory records is usually rendered redundant by the control operation of taking a physical inventory on a regular basis and reconciling it to the inventory balances in the accounts. Because most clients are concerned with the reliability and performance of all their control operations, not just those that contribute to the auditor's objective. Auditors test the entire control system. Although not required for an auditor's objective, it really should be viewed as an opportunity to provide value-added assistance with minimal cost and time increase. No single control test is always required, applicable, or equally effective in every situation. A variety of considerations that influence the auditor's choice of the nature, timing, and extent of tests of controls used to obtain evidence about design and operational effectiveness. What are those considerations? If you know them, you can give at least one and type in the comment box your answer with our course code, which is 313. As in 313. And don't forget to put the time you answered the question. Once again, the question is, what are those considerations that influence the auditor's decision or choice of the nature, timing, and extent of tests of controls used to obtain evidence about design and operational effectiveness? What are those? If you know the answer, you can type in the comment box which is the answer. So you can type at this one with our course code, which is 313, as in 3133, and don't forget to put the time you answered the question. And yes, I hope you answered it correctly. These considerations include type of evidence, sources of evidence, timeliness of evidence, and interrelationship of evidence. And yes, We will go deeply with these considerations, but before we proceed, let us first define what is evidence. Audit evidence is any information obtained by the auditor, whether from audit procedures or other sources, that is used by the auditor in attempting to reach the conclusions on which the auditor's judgment is based. Audit evidence includes information that both supports and appears to confirm management assertions about the financial statements or internal control over financial reporting, as well as relevant data or relevant information that appears to contradict such assertions. And now, let us proceed to the first consideration, the type of evidence. Definite audit evidence gathered by the auditor is more reliable than others. If accounting and internal control system design or operation documentation is available, the auditor may choose to inspect it. However, sometimes when the documentation for some policies or procedures, such as delegation of authority and responsibility, is not available or relevant, the auditor may choose to conduct observation or re-performance tests. Moving on to the second consideration, which is the sources of evidence. The test of controls, which permits the auditor to establish probable cause directly, such as observation, are more convincing than assessments that provide evidence indirectly, such as inquiry. But nevertheless, in order to improve outcomes, the observation should most likely be made as a surprise. Evidence, for example, of the separation of custodial and recording functions, just as when the cashier fails to keep customer records. Evidence obtained through observation of all those who apply the control procedure is generally extra convincing than evidence gathered by merely asking an employee who accomplishes the policy or procedure. Moving on to the second consideration, which is the sources of evidence. The test of controls, which permits the auditor to establish probable cause directly, such as observation, are more convincing than assessments that provide evidence indirectly, such as inquiry. But nevertheless, in order to improve outcomes, the observation should most likely be made as a surprise. Evidence, for example, of the separation of custodial and recording functions, just as when the cashier fails to keep customer records. Evidence obtained through observation of all those who apply the control procedure is generally extra convincing than evidence gathered by merely asking an employee who accomplishes the policy or procedure. And yes, we have arrived at the third factor or the third consideration influencing the auditor's selection process, which is the timeliness of evidence. Audit evidence obtained through observation is limited to the point in time when the procedure was used, not the entire audit period. As a result, the auditor may decide to supplement those procedures with other tests of controls, capable of providing evidence for other periods of time. Furthermore, the relevance of audit evidence is determined by its relationship to the assertion or objective of the control being tested. The relevance of audit evidence is determined by the audit procedure used to test the assertion or control. Specifically, whether these are intended to test the assertion or control directly and for understatement as well as overstatement. And of course, the timing of the audit procedure used to test the assertion or control would be a big yes to the relevance of audit evidence. Similarly, when assessing control risk in the current audit, The auditor may consider audit evidence obtained in previous audits or during an interim period. The auditor may decide to conduct some tests of controls during an interim visit prior to the end of the period. However, the auditor cannot rely on the results of such tests without taking into account the need to obtain additional audit evidence for the remaining portion of the period. And yes, we have 6 factors to be included, such as the results of the interim test, the length of the remaining period, and whether any changes have occurred in the accounting and internal control systems during the remaining period. And these are the 3, and there are 3 more in the next slide. And yes, let's just first have these 3. First, we have the results of the interim test. If significant time was spent testing the procedures for endorsing credit sales, if the test results are significant, fewer audit work may be required in the remaining period. Furthermore, due to the judgment involved, testing procedures relating to inventory obsolescence may necessitate more substantial evidence even during the rest of the period than testing procedures for safeguarding securities. Second, the length of the remaining period. If tests of controls are conducted early in the audit period, more evidence may be required than if the tests are conducted close to the end of the period under audit. And third, whether any changes have occurred in the accounting and internal control systems during the remaining period. A breakdown of internal controls for a particular period necessitates separate consideration of the nature, timing, and extent of audit procedures to be applied to the period's transactions and other events. And yes, we have the last 3 factors, which are the nature and amount of the transactions and other events and the balances involved. Second is the control environment, specifically supervisory controls. And lastly, the substantive procedures which the auditor plans to carry out. And yes, let us have the fourth one. The nature and amount of the transactions and other events and the balances involved. The presence of cash or a large amount of inventory, as well as the valuation of net accounts receivable, which are completely subjective forecasts, may necessitate significant additional evidence during the remainder of the period. We also have the control environment, particularly supervisory controls, and finally, the substantive procedures that the auditor intends to carry out. Moving on to the last consideration that affects the auditor's selection of the nature, timing, and extent of tests of controls used to obtain evidence about design and operating effectiveness. And yes, we have the interrelationship of evidence. When testing controls, the extent of evidence examination should be determined by taking into account the significance of the control procedure, the extent to something that is cumulative, and the risk that the observation of controls and responses to limited inquiries might not always accurately represent the proper and ongoing operation of controls. The auditor really should rely this assessment in part on the quality of their responses to audit inquiries and whether such responses appear sound and credible in the circumstances. If tests of controls necessitate the examination of documentation that must also be examined for substantive testing purposes, it may be more efficient and practicable to the work or ensure that the individual work plans clearly state the need to consider both sets of controls and substantive procedures. And now, we are down to my last topic. I hope you are all still doing fine and alright. So, this is all about how to test. And yes, this is my last question in my whole topic. This just a true or false question. So, the statement is, when evidence of the performance of control procedure is reasonably expected to exist, the auditor should examine it. The absence of evidence may indicate that the control procedure is being carried out as intended. Is it true or is it false? Type in your answers in the comment box with the code right before your answer. And the code would be the year you were born. And don't forget to indicate the time you answered the question. Once again, is it true or is it false? Is it true or is it false? This is the statement. When evidence of the performance of a control procedure is reasonably expected to exist, the auditor should examine it. The absence of evidence may indicate that the control procedure is being carried out as intended. Is it true or is it false? Type in your answers in the comment box with the code right before your answer, and the code would be the year you were born, and don't forget to indicate the time you answered the question. When evidence of the performance of a control procedure is reasonably expected to exist, the auditor should examine it. The absence of evidence may indicate that the control procedure is not being carried out as intended, and further investigation will be required in order to determine whether there is, in fact, an effective control. In some cases, the control may also unavailable and that there is no obvious evidence that the data evaluated is temporary and cannot be pretty much exactly reproduced. So the answer is false, since the question or the statement is, when the evidence or the performance of a critical control or of a control procedure is reasonably expected to exist, the auditor should examine it. So the statement here is the wrong one. The absence of evidence may indicate that the control procedure in the statement it is being carried out, but the truth is, when the absence of evidence may indicate that the control procedure is not being carried out. So I hope I am making sense here. So if your answer is correct, yay! Congratulations! So, Figure 8.1 illustrates selected sample tests of controls that could be performed for control activities related to credit sales made by a client entity to its customer. So, in this slide, we just have pre-selected sample tests. To begin with, we have the control activity of performance reviews. So, an example of this is comparing actual sales activity to the budgeted sales activity by product. And the test of controls that we can do is to inspect reports or documents and, of course, inquiry. Second, we have the information processing or the authorization. Like for example, sales made to customers on account are authorized, and the test of controls that we may do is to inspect the sales orders, of course, or inspect the documents. The third one is the information processing in terms of documents. Like for example, sales are recorded using pre-numbered sales invoices, and to test this activity, we may inspect the sales invoices or the documents, of course. Moving on to the next slide, This is the continuation of the figure 8.1 that illustrates selected sample tests of controls that could be performed for control activities related to credit sales made by a client entity to its customers. So in this slide, this is the last 3 selected sample tests. And yes, fourth, we have the information processing of independent checks as our control activity, and as an example for this one is that sales invoices are mathematically verified by client personnel. So with this one, we do the inspection of sales invoice, of course, or the documentation or the documents as the inspection of the documents as the test of controls. The second one is the second to the last one is the physical controls, and its example is that the duties inventory is kept in a physically secure location with restricted access by authorized client personnel. As test of controls, we have observation or inquiry, or observation and inquiry. And yes, the last control activity or sample is that we have is segregation of duties, and its example is that the duties of authorizing transactions or the recording transactions and maintaining custody of the assets have been properly segregated. And we have the same test of controls from the previous control activity, which is the observation and inquiry. So we may apply that test of control like observation and inquiry. So that was my last topic, and that was the end of my topic. And let me now turn over the space or your focus on our next reporter, Mr. Nofail Cato.
Wonderful presentation, Zaida. Now, it's all over the news that some of the government agencies and offices receive the unqualified opinion, which is the highest remark that can be given by COA. It satisfies a clean and justified financial reporting. But on the other way around, before we will get that unqualified opinion, we must learn first how methods to test controls work. How do we evaluate substantive tests and documentation of test controls? Methods to test controls. When conducting a test of controls, we have to keep in mind that the auditor selects audit procedures to obtain assurance about the operating effectiveness of this control. When we say operating effectiveness, we are concerned with the question as how was the control applied, by whom was the control applied, and was the control applied consistently? Because we are going to assess the control risk, the auditor needs to know to what extent they can rely on the client's internal control during the audit. As auditors, clients are looking into the method or design. As such, if it is designed well, we are left with a question, if these methods were implemented, would it actually work? So once the controls are identified, how do you confirm they are working? This is where the test control comes in. These controls will demonstrate to their clients that the services they are providing are safe and secure. In a case where you don't have the confidence that the internal controls are reliable, you're gonna need to increase the substantive testing. There are a number of different ways to confirm or test that a control is working. Some books have 5 methods, the others have 4, while in our case, in Rakaza, it is merged into 3 methods. They are inspection of documents, inquiries of client personnel and observation of client activities, re-performance of internal controls, or CAATS. So once the controls are identified, how do you confirm they are working? This is where the test control comes in. These controls will demonstrate to their clients that the services they are providing are safe and secure. In a case where you don't have the confidence that the internal controls are reliable, you're gonna need to increase the substantive testing. There are a number of different ways to confirm or test that a control is working. Some books have 5 methods, the others have 4, while in our case, in Rakaza, it is merged into 3 methods. They are inspection of documents, inquiries of client personnel and observation of client activities, re-performance of internal controls, or CAATS. For the first one, inspection of documents. The auditor inspects the documents in order to provide evidence about the design effectiveness by describing how a policy or procedure is intended to work. You are going to meticulously inspect the policies and procedures relating the prompted document. It's more of a verification if the controls are applied. This method would help ascertain whether there is an anomaly or the controls are properly executed with the presence of transaction approvals, reviews, and account distributions. Sa madaling salita, ang pamamaraan na ito ay upang mapatunayan na ang dokumento ay verified o ika nga sa mga office lang ay certified true copy. Ibig sabihin na ang mga papeles ay naaayon at nararapat sa pulisiya ng tagapamahala. Example, we are looking into sales invoice and the company has a rule that in every sales invoice, a purchase order number must correspond, which means that in every single sales invoice, there is a purchase order number. Ang bawat sales invoice dapat mayroong purchase order number. So whenever there is a sales invoice sent to a customer, we want to make sure that there is a purchase order number on that sales invoice to make sure that there is a legitimate sale and it was linked with an actual purchase order number. With this cause, we can verify that transactions are permissible and properly recorded. Secondly, we have the inquiries of client personnel and observation of client activities. On the side of inquiries of client personnel, we can argue that it is the least effective method when it comes to evidence control, since inquiry alone does not provide sufficient evidence that controls are effective. Did the control works? There are always open-ended questions left. There are cons in this notion. On the other hand, you can also observe the process of the client's activity as such if the controls are performed. To illustrate, you as an auditor may inquire about the situation of a warehouse and begin to ask about the policy for releasing the warehouse and inventory. Most of the time, warehouse inventory is restricted and not anyone could go in and take the inventory since there is a policy that only authorized personnel such as the warehouse manager could go there. Now, if the auditor is not able to observe this activity while on site, no control objective or criteria should ever be supported by controls only tested through inquiry procedure. Moreover, we could take note of the other side of the coin, which is the observation of client activities. We will see how the control is being applied. In its simplest sense, you could go and see if the internal control is actually being applied. This has to corroborate with the term watching. You are there to watch, to observe if there is something odd with a situation. So for example, you would stand there as an auditor and watch as the company counts its inventories or whatever procedure is that. You have to carefully observe if they are carrying out their duty or not. This method is useful when there is no documentation of the operation of a control, such as observing that a security camera is in place or observing. Last but certainly not the least, since it is the strongest method of task controls among the others, re-performance of internal controls. It was mentioned previously in the last group that it is a review of what happened. But in this case, basically, from the word itself, you are going to repeat the action or perform again the internal control as auditor. This is where we can find the application method of control by the auditor. So when you think about applying internal control, the actual internal control, you as an auditor would go and apply the internal control yourself. This could be done manually and with the help of CAATS or computer-assisted audit techniques. CAATS can be used to analyze large volumes of data or just be able to analyze every transactions rather than just a sample of all transactions. Software is generally used to perform a CAP, which can range from using spreadsheet to using specialized databases or software designed specifically for data analytics. With this, reperformance requires the auditor to execute the control, such as reperforming calculation that the system automatically calculates to confirm that the system works. For example, an entity may have as a control procedure the cash disbursement system. You as an auditor should observe entirely the vendor invoices that are approved with the signature or initials of the controller before checks are prepared and issued to the vendor. The auditor should now ascertain that this type of procedure is being effectively applied by examining a sample of purchase invoice or reperform again to see whether they are executed properly in accordance with the internal control system. Reperformance can be used when the three before methods combined fail to provide sufficient assurance that the control is operating effectively, or this method can be used to prove by itself to demonstrate that controls are operating effectively. Final assessment of control risk. Before we get to conclude the assessment of control risk, the auditor should confirm the control risk prior to completing the audit. To do this, we have to consider the basic relationship that when more auditors relies on the operating effectiveness of controls and the assessment of risk, the greater is the extent to which the auditors test controls. If we have to rely more on the operating effectiveness of controls, we'll have greater parameters to which we test controls. The more assurance the auditor intends to obtain from the operating effectiveness of controls, the lower the auditor's assessment of the risk of material misstatement will be, and the larger the sample size will need to be. The auditor also is in a position to make a reasonable estimate of the actual rate of deviation. In simple terms, as the rate of expected deviation from a control increases, the auditor will have to come up with a concept that if the control will not be sufficient to reduce the risk of material misstatement at the assertion level to that assessed by the auditor, the auditor should now consider whether the rate of expected deviation indicates that obtaining audit evidence from the performance of tests of control will not be sufficient to reduce the control risk at the relevant assertion level. If the rate of expected deviation is expected to be too high, the auditor may determine the test of controls for a particular assertion may be inappropriate. On the final notes of this subtopic, considerations are given if the auditor would evaluate the internal control design and operations as we are digging into if it is scrutinized the way we have done it in the preliminary assessment of control risk. The evaluation of deviations may result in the auditor concluding that the assessed level of control risk needs to be revised. In such cases, the auditor has to do something about it, like modify the nature, timing, and extent of planned substantive procedures. Evaluating the level of planned substantive test. The auditor's assessment of the identified risk at the relevant assertion level provides a basis for considering the appropriate audit approach for designing and performing further audit procedures. Moreover, it's understandable that the assessment of the risk of material misstatement at the financial statements level is affected by the auditor's conception towards the control environment. With this, after careful assessment of the control risk, the auditor must ensure that the assessment corresponds with the planned level of substantive test, because if not, there is a necessary revision to be done. If we look at the results of a control risk assessment, one of the three probability results will emerge. The following course of action by the auditor can be summed up in these three situations. First, if the situation was the final control risk is less than planned control risk, eventually, this will result in an action whereas the auditor would reduce the planned effectiveness of substantive tests since they don't have to worry about the possible consequences. Second, final control risk is equal to planned control risk. With that being said, there would be no need to take an action or meaning modification of the planned effectiveness of substantive tests is not necessary anymore. Third, final control risk is greater than planned control risk. The auditor needs to increase the planned effectiveness of substantive tests since the final control risk is much bigger compared to the expected or planned control risk. On the basis of relation between the effectiveness of internal control and the necessary effectiveness of the auditor's substantive test is that as internal control is more effective, lower control risk, the auditor can perform less effective substantive tests, which means higher detection risk. Communication of weakness. The whole concept, the purpose, the reason for this task control was to assess control risk. With all of these processes, the auditor may stumble upon weaknesses in the system. Now, what would happen if the auditor found weaknesses? How would he communicate it? He would address it in a case-to-case basis. In the event that the control is non-existent, the transaction review should disclose it. We have to inform, we have to nurture a good communicator within us as a future auditor. Moving forward, if a significant control exists, however, it is not functioning properly, good as nothing, even the control was dominated, the test of control, just like what we've discussed earlier, the test of controls should have discovered it. What about when there is an absence of explicit controls? Totally none. Nevertheless, it does not necessarily make the system of the underlying data poor or wrong. It's just simply weak. The weakness here removes an auditor's objective basis to fully rely on the underlying data, which may result in a call for a clear and expressive response. Furthermore, it was mentioned that on the PSA 260 that all of the material weaknesses in the design and operation should be communicated within those charged with governance, such as the audit committee. If the audit committee doesn't exist, you communicate it with the one who is responsible for the internal control. It could be the owner manager or board of directors. On the last note, we have to emphasize the importance of documentation during this process. Documentation of test of controls. When we say documentation, we first think of it as simple piles of paper, but little did we know that it holds so much power that it is beyond our imagination. A case can turn the table in the court as long as there is a substantial documented evidence. So it is important here in auditing to document the test of controls. An auditor should be meticulous in the documentation process. The overall responses to address the assessed risk of material misstatement. Then, afterwards, after evaluating the results of the test of controls and making assessment of the control risk, here comes that the auditor must submit or have his version or somehow own assessment of the control risk. So what are those? To sum up, an auditor should document the following. First, the overall responses to address the assessed risk of misstatement at the financial statement level. Second, the nature, timing, extent of the further audit procedures. Third, linkage of those procedures with the assessed risk at the relevant assertion level. Fourth, the results of the audit procedures. Fifth, the conclusions reached with regard to the use in the current audit of audit evidence about the operating effectiveness of controls that was obtained in a prior audit. Heads up, the manner in which these matters are documented is based on the auditor's professional judgment, Section 339, Audit Documentation, which establishes standards and provides guidance regarding documentation in the context of audit of financial statements. You can also see on our Recasa book, page 208, figure 8.2, a sample of an audit program. Procedures for obtaining evidence and selecting items for testing. Based on the audit procedures performed and the audit evidence obtained, the auditor should evaluate whether the assessments of the risk of material misstatement at the relevant assertion level remains appropriate. For auditors to have a reasonable conclusion, he must obtain sufficient appropriate audit evidence. We also have to take into account that the auditor uses professional judgment and exercises professional skepticism in evaluating the quantity and quality of audit evidence as to satisfy the integrity requirement of the profession, and hereby suffice the audit opinion. Following are kind of audit tests and their purpose. We have transaction review. Basically, from the word itself, you are going to review the transaction that occurs in order to confirm the understanding of the auditor's flow of data. In today's contemporary technology, transaction review is made easy with CATS software. Secondly, functional tests of test of controls. We have to gather evidence that controls are functional. If we are going to examine a control through different methods and we found out that the control is functioning and there is a notion of continuity, then that's it. After all, the continuity of control is what we are expecting from the test of control. Validation procedures or substantive tests. Third, procedures or substantive tests. This is achieved through substantiating an account balance by confirmation, physical inspection, re-performance, just like what I've explained earlier, in which you're going to perform again the procedure. Validation procedures are called upon when control is weak, and on the other side, statistical sampling of the underlying data could provide assurance. In its simplest form, an auditor validates the entirety or observation of a client's validation procedures. Lastly, analytical review. Its essence was to support a logical relationship among items and accounts. Hence, sampling is not possible in this case. It is indeed true that professional judgment is the guiding principle when it comes to picking the appropriate procedures. With this, their application will have a selection of items for testing in order to determine which means or combination of means to use. The auditor is not limited to the audit risk and audit efficiency. It also needs to satisfy the methods used if it's effective in providing sufficient appropriate audit evidence to meet the objectives of the test. We have three selections. First, selecting all items. It is evident to use for a small population since you are going to pick the entire population of items. To illustrate, 100% examination may be appropriate if the population is likewise small for a large value item, since both are inherent and control risk are possibly high, which corroborate with the idea that it does not provide sufficient appropriate audit evidence. Second, selecting specific items. Unlike the previous one, where you select the entirety of the population, here you, as an auditor, would consider the different factors as to knowledge of the client, preliminary assessment of inherent and control risk, and the characteristics of the population being tested. To continue, the specific items they refer may include the following: high value or key items. This includes the items that are high value, somehow susceptible, unusual, particularly risk-prone, or that have history of error. We can cite an example like this, that the auditor needs to examine all pay-to-cash checks. Another one, all items over a certain amount. All items included here have surpassed the threshold. This is to verify a large portion of the total amount of an account balance, like take for example the all additions to fixed assets over 100,000 should be physically inspected. We could put it in simple terms that if a certain asset has reached a specific amount, an inspection has to be done. Third, items to obtain information. This item can be included as this is used to obtain information about the client's business, the nature of the transactions, accounting and internal control systems. Fourth, items to test procedures. The auditor may use judgment to select and examine specific items in order to understand whether or not a particular procedure is being performed.
Thank you, Mr. Cato. So to proceed, the auditor may decide to apply audit sampling to an account balance or class of transactions. Audit sampling is the application of an audit procedure to less than 100% of the items within an account balance or class of transactions for the purpose of evaluating some of its characteristics. Now, if you had paid attention to what I just said, it is an application of an audit procedure to less than 100% of the items. Now, why less than 100 and not exactly 100 or more than that? It is because large volume of controls and transactions makes it extremely difficult for the auditor to verify each item occurring during the entire period of audit engagement. Another reason is that no client would be able to afford the cost of 100% audit. Besides, when auditing financial statements, it is not feasible to audit or check every single items within the financial statements. Aside from it's costly, as I said, it will take a lot of resources and time to do so. That's why audit sampling enables auditors to make conclusions and express fair opinions based on predetermined objectives without having to check all the items within the financial statements. Now for the next part, in this portion, I'm going to present to you the different sections of our report. So the first one is the overview, and then the next is the comparison of the general approaches to the audit sampling, and lastly, the process of audit sampling. So for the overview part, let's start with this. Audit sampling is used in both attribute sampling or test of controls and variable sampling or test of details of transactions and balances. Next, audit sampling and other selected testing procedures under PSA 530 provides guidance to the auditor in designing audit procedure to ensure that items for testing are appropriately selected. In order to gather audit evidence that meets the objectives of the audit, this PSA defines basic concepts in audit as follows. Here we have error, anomalous error, population, sampling risk, non-sampling risk, sampling unit, statistical unit, stratification, and lastly, tolerable error. Next slide. The first one is error. So error is either the control deviation and misstatements. This means that the total error is used to mean either of the two, the control deviations when performing tests of controls and misstatements when performing substantive tests. Next one is anomalous error. So anomalous error is an error that arises from an isolated event in a way that has not recurred other than on specifically identifiable occasions and is therefore not representative of error in the population. So basically, anomaly or anomalous means something is irregular. However, the PSA 530 defines this as what I have stated earlier, meaning misstatements can be found in the financial statements. Next is population. So population, as we all know, is the entire set of data and may be divided into strata and subpopulation. Here it is the entire set of data from which a sample is selected and about which the auditor wishes to draw conclusions. For example, all account balance or class of transactions constitute a population or considered a population because account balance and class of transaction is a set of data. As being said, it is divided into strata or subpopulation, with each stratum being examined separately. Next is sampling risk. So sampling risk arises from the possibility that auditor's conclusion may be different from the conclusion reached if the entire population were subjected to the same audit procedure. So it has two types. So the first one is the risk that affects audit effectiveness and may likely to lead to an inappropriate opinion, and the next one is the risk that affects audit efficiency, leading to additional work to establish that initial conclusions were incorrect. So the first one is the risk that the auditor will conclude in the case of test of controls that the risk is lower than actually is, or in case of substantive test, a material error does not exist when in fact it does. So the second one naman, it is the risk that the auditor will conclude in the case of test of controls that the control risk is higher, kanina lower. So this one higher than it actually is, and in case of substantive test, a material misstatement exists when in fact it does not. So next is non-sampling risk. Non-sampling risk risk arises from the factors that causes the auditor to reach an erroneous conclusion for any reason not related to the size of the samples. For example, most audit evidence is persuasive rather than conclusive, so the auditor might use an inappropriate procedure and the auditor might misinterpret evidence and fail to recognize an error. Next is a sampling unit. So as we all know, sampling unit is the individual items consisting in a population. So for example, checks listed on deposit slips or credit entries and bank statements, sales invoice of debtors balances, or a monetary unit is an example of sampling unit. Next is statistical sampling. So statistical sampling is any procedure that uses probability theory. So this means that any approach that possesses these characteristics, which are the random selection of sample and the use of probability theory to evaluate sample results, including measurement of sampling risk. So a sampling approach that does not have any of the mentioned characteristic is considered as non-statistical sampling. Next is stratification. Stratification is the process of dividing population into subpopulation. Here, each of which is a group of sampling units which have similar characteristics, often monetary value, since we are doing an audit sampling. Lastly is tolerable error. So tolerable error, the maximum error in a population that the auditor is willing to accept and still conclude that the auditor's objectives has been achieved. So it is considered during the planning stage, and for substantive procedure, it is related to the auditor's judgment about materiality. So the smaller the tolerable error, the larger the sample size. So in the test of controls, the tolerable error is the maximum rate of deviation from a prescribed control procedure that auditors are willing to accept in the population and still conclude that the preliminary assessment is valid. So sa iba naman, sa substantive test procedure, the tolerable error is the maximum monetary error in an account balance or class of transactions that the auditors are willing to accept, so that when the result of all audit procedure are considered, auditors would be able to conclude with reasonable assurance that financial statements are not materially misstated. So for the next part, is the general approaches to audit sampling. There are two general approaches to audit sampling, which are the statistical and non-statistical sampling. So the first one, the statistical sampling, uses the laws of probability to select and evaluate the results of the audit sample, thereby permitting the auditor to quantify the sampling risk for the purpose of reaching a conclusion. In other words, it involves a sampling approach where the authorities utilizes statistical method such as random sampling to select items to be verified. For example, let us consider a company of more than 100 inventory transactions on its records. With this, the sampling method is recommended to use due to the high number of transactions. So here, let's say 10 items are being selected from the total population. So every single item within 100 has an equal probability of being selected for accuracy. As a result, this benefit the auditor, since they can still make an audit opinion, but they do need to check all the 100 transactions. On the other hand, the non-statistical sampling simply is the opposite of statistical sampling. So items are not chosen randomly, and they are chosen based on the auditor's judgment, and the result of the testing from selections is not used to infer this conclusion for the entire population. So example, auditors may choose to select items based on criteria such as the value of specific items or items of specific information. So next, the PSA 530 emphasizes that sample size is not valid criterion to distinguish between statistical and non-statistical approaches, meaning it is a function of factors including but not limited to the auditor's assessment of inherent and controlled risk to tolerable error, confidence level, and auditor's intended reliance on accounting and control system. But we must take note that the decision to whether use either of the two is a matter of auditor's judgment regarding the most efficient and effective way of getting an appropriate audit evidence. Now, let's move on to the process of audit sampling. So, the application of audit sampling obviously involves a systematic process that consists of the following steps. So, here, written in our PowerPoint, as you can see, after this process comes with sample selection. So, the sample selection will depend on attribute being selected, the assessment of risk, and lastly, the sample method used. So, the first one, attribute being selected, means that an item being sampled either will or won't possess certain qualities. Example is whether a transaction complies with authorization and control requirements, or whether a transaction is correct in evaluating a process. So the more significant the attribute is, the longer the sample size will be, or the larger the sample size will be. Now, if the sample size is large, then it would be easier to see a difference between the sample mean and the population mean, because the sampling variability is not obscuring the difference. Another reason is that the value of standard error is directly dependent on the sample size. Next is the assessment of risk. It is likely the identification and analysis of relevant risk to the achievement of an entity's objectives. So the higher the likelihood that an audit procedure will reveal significant problems, the more items the auditor will wish to examine. The samples may be selected through the following method. First, the random number selection. Next, the systematic selection. Next, the haphazard selection. And lastly, the block selection. So the first one is the random number selection. It is usually performed by obtaining a series of numbers that uniquely identifies specific items in the population by identifying numbers. Numbers. So they can use either generated using a computer program or simply from a table of random numbers. However, with the table of random numbers, it will not provide numbers that correspond directly to the document number. Thus, every item in the population must have a corresponding number in the table. Since it is random, it ensures that all items within a population stands an equal chance of being selected. Examples of this are sales invoice or a monetary unit. Take note that the random number selection is the most theoretically correct, but can require more time to make selection. Next, a systematic selection. It starts with one randomly selected transactions and then uses a predetermined selection interval to identify the rest of the sample. With this, it can only use if the auditor can determine that there is a periodic or cyclic or other biased arrangement of the characteristic or attribute being tested. So in other words, the usual technique is to begin sampling at a random point in the population and then make additional selection at a predetermined interval. Now, can this method be inefficient? Yes, but at least the broad sample is selected and that is likely to be the representative of the entire population. So we should take note that the outcome generated by systematic sampling may be biased if the list on which it is employed is organized in a manner that matches the sampling interval. Next is haphazard selection. Although it is the least advisable, it is used sometimes as a rough approximation of random sampling, in which the auditor does not intend to employ a systematic approach to select a sample, though it's non-statistical in nature. Its intention is to approximate a random selection by picking items without any conscious bias. However, it can be deficient for bias not to enter in this type of method, since the auditor may be tempted to select items that are more convenient to access.
Next is block selection. So block selection, it involves selecting a block of contiguous items from within population. So in other words, sequential series of selection is made. For example, an auditor used block sampling to examine customer invoices and intends to pick 50 invoices. So he or she picks invoice number 1000 to 1049. This approach is very efficient since a large cluster of documents can be pulled from one location. Also, sampling risk can be reduced by selecting large number of blocks of sample. Moving on, we have sampling techniques. So we use sampling techniques in performing test controls and substantive testing. However, we will focus on test controls for this report. So next, samples selected for attribute measurement purposely or may be mathematically weighted using different approaches, such as first, attribute estimation, next, acceptance sampling, and lastly, discovery sampling. So the first one, the attribute sampling. So the first one is attribute sampling. So the auditor estimates the rate of error occurrence to decide what degree of reliance to place on a system of accounting and internal control. Next is acceptance sampling. So in acceptance sampling, it is the examination of a random sample from a population to see if the number of issues found would allow the population from which it is shown to be accepted. This approach does not measure the relative quality of a population. Instead, it represents a decision to accept or reject a population. Here, the auditor is most interested in measuring the probability that the actual error rate is simply less than the acceptable upper precision limit. Next is discovery sampling. So in discovery sampling, it involves the use of a sample to determine whether percentage error does not exceed to the designated percentage of the population. If the samples does not contain error, this means that the actual error rate is assumed to be lower than the minimum accepted rate. In short, a sample is shown to discover whether the records contains critical errors due to shortcomings in an entity's internal control. Now, with all these approaches and techniques that I've said, why do we conduct tests of controls? So its main purpose is to determine whether the controls the auditor wishes to test is functioning effectively during the period under audit. So sampling objectives may pertain to test controls for voucher process, billing systems, and many others. However, sampling unit defines the nature of the population items making up the sample. Also, before doing anything else, dapat may consider that the auditor must ensure that the population is complete and appropriate for a larger chance of accuracy and judgment in performing the audit procedures. So for tests of controls, the auditor may encounter voided documents, or used or inapplicable documents, or missing documents. So we must take note that when errors are identified, the auditor needs to consider the direct effect of identifying errors on the financial statements and the effectiveness of accounting and internal control systems, and their effect on the audit approach.
My Zaida Lidasan Abid, and together with me is my group mates.
I am the file Sanded Kato.
And I am Charlotte J. Palma.
Thank you for listening.